Hey, good morning everybody. Today is Friday, August 26th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's start off today by taking a quick look at the Russell 2000. But before we do that, yesterday was an interesting day in the market. While the Dow, S&P 500, and NASDAQ all closed down on lighter trading volume, the small cap S&P 600, Russell 2000, IBD 50, and the IBD 8585 all closed higher on heavier accumulation volume. The S&P 500 closed down 0.14%, closing at 2172 and near the low for its daily trading range, another bearish close. The S&P undercut 2175. The 2175 area has been acting as support recently. The S&P also closed below its downwardly sloping 10-day simple moving average and its 21-day exponential moving average, and is now 3 out of 4 criteria toward a don't buy signal. The NASDAQ closed 0.11% lower, finding support at its long-term trend line. The NASDAQ closed at 5212 and also closed near the bottom of its daily trading range. In spite of the above-mentioned concerns about the S&P 500, our market timing model on both the NASDAQ and the S&P is on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. Investors.com is indicating an uptrend under pressure with 5 distribution days on the S&P 500 and 6 on the NASDAQ, after having lost a day from each count due to age yesterday. Advancing issues bettered decliners by 5 to 4, new highs bettered new lows, but the margin's been consistently narrowing recently, and our new high, new low indicator, a secondary indicator, is on a sell signal. Small capitalization stocks handily bettered large again yesterday and continue to outperform on a 10-day moving average basis. This is bullish. We're getting mixed signals from the market recently indicating a market in flux. We remain on a buy signal on both the S&P and the NASDAQ, but our buy signal is seeing signs of strain. We're certainly overdue for a correction, but for now, we need to continue to watch and wait for the market to pick a direction. Traders should err on the side of caution and, as always, keep your stops in place and current. Okay, what we're looking at here is a 5-year chart of the Russell 2000. And the reason we're looking at this is I wanted to point out that unlike the S&P 500 and the NASDAQ, the Russell 2000 hasn't taken out its June 2015 all-time high. The all-time high is in the 1296 area. Let's switch over to a 6-month chart. The reason this is important is yesterday the NASDAQ closed higher, closing near the top of its daily trading range on heavier trading volume than the prior day, giving it an accumulation day. We've often pointed out over the past year that I think that the Russell 2000 is the key to the market going forward here. I would really like to see the Russell come back and test this resistance area up in the 1296 area. And yesterday the Russell showed strength when the rest of the major indexes were showing weakness. Let's take a look at the NASDAQ composite. Yesterday the NASDAQ was down 5.49 points or 0.11%. We closed at 5212, held support at this long-term trend line. This trend line goes all the way back to the beginning of the bull market in 2009 and has acted as both significant support and resistance over the past couple of years. Trading volume yesterday was pretty light. We were well below average and below the prior day. For you followers of William O'Neill, we are in an uptrend under pressure in the market. We've been in an uptrend since June 30th, and we now have 4 distribution days on the NASDAQ, and those distribution days have been fairly well spread out. We haven't seen clustering of distribution on the right side of the chart, and so I really don't think distribution's all that much of a concern. Our market timing model is on a buy signal, and right now the NASDAQ composite is bracketed by support at this long-term trend line and resistance at its June 2015 high in the 52.32 area. If we were to break below this trend line, our next significant area of support is going to be down here in the 51.65 range. NASDAQ's trading in a pretty tight range, and we'll see which direction it wants to break. In the meantime, we want to be cautious. Let's take a look at the S&P 500. S&P yesterday closed down 2.97 points, or 0.14%. We closed at 2172 and closed below this recent support resistance area in the 2175 range. We closed near the low for the day. That's a bearish sign. Trading volume yesterday was below the prior day and well below average. The S&P is in an uptrend under pressure. We have 4 distribution days. Like the NASDAQ, the distribution is fairly well spaced. We're not seeing any clustering on the right side of the chart, and so I don't think distribution's a concern. We are currently on a buy signal on the S&P, but the S&P is showing significant signs of weakness here. I want to point out, to go to a don't buy signal on the market, we're going to look for 4 things. First, the S&P has to be above its 200-day moving average. We're trading above the 200-day moving average. Secondly, the 10-day simple moving average, which we show here in green, and it's actually kind of hard to see, it's buried in all of the noise, needs to be trending downward. It needs to be lower than the day before. It currently is trending downward. The 21-day exponential moving average, which we show in pink, also needs to be lower than it was 2 days prior. It currently is lower than it was 2 days prior. And the final criteria is that the market has to close at least 1% below its 21-day exponential moving average. That's what this envelope is. And note, we have a little ways to go before we get to that envelope. So right now, 3 out of 4 of our criteria are present for a don't buy signal. But we remain on a buy signal. This is a conflicted market, and we need to be cautious. Let's take a quick look at our position holdings. We currently hold 6 position trades, which is quite a few. Generally, we want to hold no more than 5 positions. And so we'll be looking for an opportunity to shed at least 1 position. Currently, we hold Alibaba, BABA, which we bought on the gap out of this first stage cup and handle base. ACIA, which we bought on the break above this IPO base. Note that ACIA is very close to pulling back 15% from its recent closing high. If we were to close 15% below that high, we would sell half the position. Max Linear, which we bought on the bounce from this 200-day moving average. Zimmer Bio Holdings, which we bought on the breakout from this first stage base in the 123.43 area. Edwards Life Sciences, which has not been acting particularly well recently. We bought it on the break from this 3 weeks tight pattern at 117.46 and are currently at a little bit of a loss position. Our current stop on Edwards is 111. And our last holding is Mobileye, MBLY. which we bought on the attempted breakout from this kind of funky first stage flat base. Our stop on Mobileye is 47.42. And I want to keep an eye on YRD. Urendi Limited is a Chinese-based operator of an online consumer finance marketplace connecting borrowers with investors. Note how yesterday the stock pulled back to its 50-day moving average and found support. Notice how yesterday we pulled back to the 50-day moving average. If YRD pulled back to its 50-day moving average, it may present a good entry. The other potential entry for this position would be a move above the high of the day yesterday. If we were to buy YRD at the 50-day moving average, we would set our stop 5.5% below the 50-day moving average. If we were to buy it at the high of yesterday, we would use our usual 7.5% stop. Other than that, we made no changes to our position holdings yesterday. Taking a quick look at our swing timing holdings. Yesterday, the NASDAQ Composite closed below its 5-day and 10-day simple moving averages, and the 5-day simple moving average is trading above the 10-day simple moving average. That's our definition of a trending negative market. We currently hold one swing trade position, that's DPZ, which we bought on the breakout of this short-term consolidation in the 149.13 range. Yesterday we sold NTES when it closed below its 5-day simple moving average. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.